Let me briefly provide you the background about this session. We will be discussing about remittances, as I said in the beginning, what socio-economic benefits the remittances can bring, how the digitalization and banking services can facilitate the financial inclusion of migrants and their families, as well as how the private sector can engage to maximize the benefits of remittances. So we will be touching upon these issues during the session. And I would like to highlight that this panel discussion is organized within the Enhancing the Socioeconomic Benefits of Remittances project in Azerbaijan, which is funded by the IOM Development Fund and implemented in cooperation with the State Migration Service of Azerbaijan. And we would like to extend our special thanks to Azerbaijan Banks Association for giving us this opportunity to discuss on this topic today, and also the Central Bank of Azerbaijan for continuous support to the project, and also for all the panel speakers who are with us today. Just a quick definition of remittances. We hear this word a lot, but what are the remittances actually? According to IMF definition, remittances include personal transfers, net compensation of employees, and capital transfers between households. For those who you know, remittances are in the current account section of the balance of payments, but interestingly, we have also in the remittances definition capital transfers among households. So this is very interesting, and IMF is currently looking at revising this definition, so just that you know. And a couple of words, a couple of quick facts about the remittances, why they are important. You know, we have around 1 billion people in the world, which is 1 out of 8, they benefit from remittances. Like 200 million migrants send money to home, and around 800 million are the recipients of the remittances. So as you can see, remittances is a very important means for 1 out of 8 persons in the world. And in 2022, there were approximately around 650 billion remittances sent to low-income and developing countries, middle-income countries. And about 70% of these funds were spent on bringing food on table, spending on healthcare, spending on education fees, and also housing. So as you can see, this is very important means, but related to the banking sector, cost of sending remittances is still high. Unfortunately, like Sustainable Development Goals have a target to reduce the remittance cost below 3%, but still it is above 6% in current practice. So this is something to consider in the financial sector. Also, in the Europe and Central Asia region, if you look more closely, on average cost of sending $200 of remittances is 6.4%. It was 6.4% at the end of Q4 in 2022, and which is an increase from 6.1% in the year 2021. So as you can see, something happening. The cost of remittances is not falling down, unfortunately. Room for improvement there. When it comes to Azerbaijan, I would like to highlight that remittances is normally around 2% of GDP, but it was increased to more than 4.6% in 2022. But obviously for reasons which took place in the geopolitical arena in the world and in the region. So I will stop with the facts, and I will start inviting our speakers, our distinguished speakers. First, let me give the floor to Ms. Maria Basserman. The presentation will be on the topic of the role of remittances and financial and digital inclusion in regional and local development. Please.
Yes, hello. Thank you for the invitation, also the possibility to contribute to this International Banking Forum. I will keep it short so we can go early into the break, but I will set a bit the scene with my intervention and focus on the general role of remittances and financial inclusion in local and regional development. And a bit to add to the numbers mentioned in the introduction by our dear moderator, and also to underline the importance of remittances for families, for communities, but also for the development of countries. Let me highlight that remittances are often the most direct and well-known link between migration and development. And this link is showcased with the fact that since 2015, remittances have been the largest source of external finance flows to low and middle income countries, and that remittances to low and middle income countries have been about 3 times the volume of official development assistance for more than a decade. And I think these 2 facts tell us how important remittances can be for countries' development. And I mean, in some countries in Central Asia, for example, 30% of the GDP is coming from remittances, just to mention one number. And indeed, remittances have a positive impact on a national and local and a household level. So let me give you some examples. Remittances can lead to an increase of national income. They can lead to a gaining creditworthiness on international credit markets. And maybe if we look at the more local and more household level, they boost local economies. They allow people to afford basic needs, but they also strengthen the resilience and the ability to face risks. And we've just heard in the previous panel about climate change and risks related to climate change, and remittances can help families to mitigate these risks in a better way, for example. It is, however, important to note that remittances cannot and should not replace national development strategies and public investment, of course. Remittances alone cannot address structural inequalities that hinder people's developments. And I think one last point on the general notes is to say that remittances can also have an effect on social dynamics. So they can reinforce pre-existing hierarchies and power relations or gender roles within families and communities. So if we integrate them into our development strategies, we need to keep these kind of consequences or impact of remittances in mind. However, together with other factors such as diaspora investment and trade, which builds up between countries, between 2 countries due to diaspora, remittances are seen as a positive outcome of migration and are a strong engine for sustainable development in many low and middle income countries. So maybe a few points before I come to an end to how can we use this positive impact or increase this positive impact? So what measures can we take to increase the positive impact on development of remittances? So first of all, we need to improve migrants' decision-making in sending remittances. And for this, we mainly need to understand their priorities and their needs. We, for example, IOM did a research in Central Asia and the Russian Federation on digital remittances. And we did a supply and demand side analysis. On the demand side, we looked, on the supply side, we examined existing legislations, infrastructure, and products of digital remittances. And on the other side, we looked at the behavior of people, the perception and decision-making processes. So why do people choose certain financial service providers? Why prefer cash over digital transfers? What obstacles do they face? And one thing we found out is that there is an infrastructure there, especially in Central Asia and the Russian Federation, but people still tend, and they have phones, but people still tend to use cash instead of digital transfers, meaning this is more a behavioral issue than a structural issue. A second point, and this was also already mentioned, to maximizing the impact of remittances is, of course, reducing the costs to below 3%, as pointed out in the Sustainable Development Goals. And in some corridors, service providers still charge up to 20%. So just to mention how high this can be in some cases. And And maybe one point on financial service provider, they can design their products for the specific needs of migrants and also include the needs of female migrant and recipients. Remittances recipients are often females, and we need a bit more to consider their specific needs. For example, migrants might want to pay directly for certain services. How are they different to other customers? Why do women use products less, or why do they have less access to digital services? And practice and studies have shown that designing products specifically for migrants and including a gender aspect can bring new customer segments and profits. Yeah, and to conclude, just to mention a short point about the project we're implementing in Azerbaijan, together with the State Migration Service, the project enhancing the socio-economic benefit of remittances in Azerbaijan. So what have we done so far in the project? And you can also find the results at our IOM stand here in the hall. So we did a study and analyzed existing practices and policies on remittances, as well as remittances consumption models to determine legal, social, gender, and economic gaps in remittances flows in Azerbaijan. We did a comprehensive analysis and mapping of stakeholders. We prepared a roadmap and took up on uptake to digital remittances in Azerbaijan with 29 specific actions, and we're happy that some of these actions have already been included in the draft financial inclusion strategy developed by the central bank. Yeah, and I think overall the project has shown that it is important to explore opportunities of cooperation between international organizations and the private sector, and of course also the public sector. Thank you.
Thank you, Ms. Wasserman. Just to highlight, if this 3% target is achieved, the reduction of the remittance cost from 6 to 3%, basically migrants can live with themselves around $20 billion. So imagine the amount which is now at stake. So thank you very much, Ms. Wasserman. And let's, without further ado, invite Mr. Elvin Afandi, Head of Corporate Strategy and Research Division at the Islamic Corporation for Development of the Private Sector. Mr. Afandi will speak about the contribution of digitalization of remittances to enhancing financial inclusion of migrants and their families, as well as the role of the private sector in facilitation and optimization of remittances. Please, Mr. Afandi.
Thank you very much, Mr. Murshid. Her vaxtınız xeyir. İcazənizlə mən də təqdimatı ingiliscə eləyəcəm. Təqdimatçıların çoxu ingiliscə olduğu üçün üzrlü sayın. So first of all, it's my great pleasure being here, and really thank to the Azerbaijan Banking Association and also International Organization of Migration for having me today here. Just before going direct to the subject, I would like to walk you through maybe very quickly about the background I'm coming from as an institution. We called ICD, Islamic Corporation for Development of the Private Sector. It's the private sector development arm of the Islamic Development Bank, based in Jeddah, Saudi Arabia, and established nearly 25 years ago, basically supporting 55 member countries across the globe, including Sub-Saharan Africa, Far East Asia, Central Asia, even two member countries from Latin America as well. And basically what we do, in addition to our own capital and resources, we also mobilize and co-finance through the market, basically support private sector either directly through corporate financing or project financing, or indirectly through our change agents or change channels that are basically financial institutions and dominantly the banks. And as a topic of interest or the strategic direction of the institution, we are pretty much active as a multilateral with other similar institutions like World Bank, Asian Development Bank, etc., to invest on the sustainable infrastructure, renewable energy, agri-food, food security, and then also heavily on the financial sector. For the time being, for example, around 60% of the investment portfolio of ICD resides in the financial sector and dominantly in the banking sector. In terms of the member countries, we have a unique club of member countries from remittances or migration or diaspora resources point of view. We have plenty of member countries that basically serves as a home for migrants, and also we have the countries that basically are the recipients of these remittances. So we have the countries, like the member countries like in the Middle East, the Saudi Arabia where I'm living in, every third person is expatriate or migrant. So around 10 million out of 30 million of population are basically the migrants and sending remittances to their member countries, to their own countries. And while we have also a set of member countries like Central Asia, Uzbekistan, Tajikistan, that basically the remittances are playing a crucial role in the value generation, GDP growth, etc., and also a number of sub-Saharan African countries, and also countries from East Asia like Bangladesh, Pakistan, where also the remittances are a crucial part of the economic dynamics. So this is very in a nutshell what we all about, and now from the rest of the presentation I'll try to basically marry these two, the ICD's mandate with the subject of today, digitalization and the financial flows. So what we see today, just to reiterate or to continue what so far Hurshid and Maria alluded to, we as a multilateral development bank, we see remittances or the diaspora resources having the multifaceted or all the different channels of impact on development agenda of the countries that we serve. Definitely, it is a good source of capital investment and financial literacy. What we see around 1/4, so around 25% of the remittances that are flowed to the home countries are not used for consumption. It's more of like saving amounts. So that is basically a good channel of supporting the capital markets and financial markets and an overall ecosystem in the countries that the money goes. Partnership and networking, definitely the migrants, they bring wealth of social capital, network and partnership and trade facilitation that we also put an eye on when we basically, as a development institution, treat the remittances or the diaspora resources. Education and skill transfer, definitely, is another critical area. Just give an example, when in 1980s, Indian base or the Indian, the people like basically that worked in the United States in the IT sector mainly, and as an entrepreneur or executives, managers, basically paved the way to have their own IT system in the country to be advanced as well through the outsourcing, etc. So now it's really serving as one of the most attractive hubs for the IT services, simply because of the migrant Indians basically transferring this knowledge and education to their home country. Poverty alleviation definitely is there, and I don't want to explain more. And economic support, especially during the global challenges. What we see compared to the other foreign transfers or the foreign resource transfers, the remittances are the most resilient, would say, and carries the counter-cyclical nature. So if you just look at the recent crisis globally, the pandemic, for example, compared to other foreign money transfers, the remittances stayed quite solid, actually grown, and basically says that it basically can be a strong source of social safety net for many home countries, especially the migrants. When they see a more challenge in their home country on their families, they spend more money. So that's basically the opposite of the other ways or the channels of the foreign transfers, and that's why we should treat the remittances in a bit different from the other source of financing. So as a multilateral development bank, SDG is in our DNA, and we see remittances or the diaspora resources impacting the many SDGs that we have from the United Nations, like reducing poverty, improving health outcomes, improving the quality of education, gender equality and women economic participation, job creation, etc. And basically, while we support the easier transfer of money or remittances and support the life of the migrants, we basically basically more closer to the achieving our SDG targets. When it comes to the digitalization and world of remittances, again, right now, according to different empirical research, around 30 to 60% of the remittances transfers are done informally, through the cash, through friends, etc. So still there is a long way to go for the digital space to integrate the digital solutions to the remittance flows. And according to various studies also, it shows that it can minimum reduce the cost of transfers by half. So right now we talk about an average of 8 to 10% of the transfer cost, which can be reduced down to around 4 to 5%. That's a huge amount. We are talking about the billions here. And this money can be easily utilized for the many other purposes in the home countries or families, for the capital investment, for savings, for more consumption, more education, health, etc. So and also another beauty is that while having the more digitalization integrated to remittances flows, we reach to the people that are far from accessibility, especially in the rural areas. So around 50 or more than 50% of the remittance recipients are residing in the rural areas. So by having them have the financial literacy in place, the access to the digital solutions, etc., we can definitely make them having the resources faster and also less costly. There are some solutions already in the market. Maybe I can allude to. There is a solution called the Saver Asia, which basically imagine the remittance transfer program similar to Booking.com or Amazon. So you are searching for a product or hotel, and you want to make sure that you find the best deal. So that solution, like Saver Asia solution, gives you the best solution of transferring money in terms of time and cost. So these kind of solutions are basically can be used or applied to many other geographies. It's mainly in Asia, serving the countries like Indonesia, Malaysia, Thailand, etc. But it's definitely can be applicable to many other countries. Just for the people who they do make a decision to transfer money, they need to know what is the best and less costly way of doing that. And the digital solution, basically making life easier for the people or migrants, is like it's called Aadhaar. It's from India. This is the largest ID recognition platform in the world, basically helping the many peoples just to be 100% digital, while through the face recognition and the personal identification number and biometrics to utilize many government and financial sector services in the transferring money or supplying documents, etc., etc. So just to also allude to Maria's the message on like special role of some segment of the people, like women, There are also solutions on that regard, like it's more of like UK based called the Your June, is basically specifically targeting women entrepreneurs, women migrants, to literate them financially, to make the migrant solutions available, to educate them in terms of the job opportunities, like you are coming from the sub-Saharan Africa to any European country. So through having the proper education program tailored to you, so you basically can be a good fit for the market, job market, and be demanded. So those solutions are there, but again, the main message is that sometimes we need to make sure that it is not just a one-man show. There is no that we can simply expect the private sector to have these all solutions. So it needs the governments, financial institutions, technology providers, and migrant communities as well to communicate, to partner together to basically make all this available. My last presentation slide is more on the role of the private sector in this overall narrative. Definitely, as an ICD, what we do, as I said in the beginning, 60% of our investment in the private financial sector, mainly banks. So what we do is we make sure that the digitalization and fintech solutions are on top on the agenda of the financial institutions when we deliver service to them. So they can definitely, as a private sector, can be important change agents, basically through the venture capital, through the supporting the startups or co-partnering. We call it a model called the PPP, public-private partnership, where the government sector sometimes needs to step in to make the market bankable or attractive for the private sector to put the extra money there. Sometimes private sector, you see them, they don't necessarily find the migration or the diaspora resource facilitation attractive for the business. But when you have like the ID solutions like in India, which is a solely government solution, which is now very well integrated to the financial sector and the private sector, and they take an advantage of this. So with this, I will maybe stop here and give the floor back to Urshid. Thank you.
Thank you so much, Elvin Bey. Please. Very, very comprehensive presentation, and I would like to highlight one point that you raised. Migrants not only bring money, but also skills, which is very important, which can be very important for developing countries. But let's continue on topic of financial inclusion and digitalization of remittances. And I would like to invite Ms. Hayala Mammadova, Senior Specialist in the Payment Systems and Settlements Department of the Central Bank of Azerbaijan. Ms. Mammadova will speak about the navigating financial inclusion challenges for migrant families in Azerbaijan. Please.
Yeah. Thank you so much for inviting me to this panel. And Mr. Moderator, after the presentation, we will going to have some question and answer sessions because I made the presentation briefly in order to create some broad view among the participants so they can understand the global trend and local trend. Here I highlighted key indicators related with global remittances. For many countries, money transfers from citizens working abroad are a lifeline for the development of countries. Migrants send home part of their earnings in various forms to support their families, and sometimes it is also called like migrant remittances. And particularly, I would like to here highlight, it was a great pleasure for me to work together with local and international experts in digital remittances report when prepared by the support of International Organization of Migration Office, Azerbaijan office. And there we learned a lot and we shared a lot of international experiences. Here you can see that countries received transfers worth 794 billion in 2022 from citizens work abroad. It's quite big amount, and I will provide some further information on the dynamics amongst the countries because in international organizations there are different classification of the countries by the income level, and high-income countries are not so much active in the remittances. However, low and middle-income countries have big development impact thanks to the remittances, particularly those labor forces are working abroad and sending money back to their countries. And this shows exactly top low-income and lower middle-income or upper middle-income countries. And I would like to here highlight particularly specific dynamics. This is the most recent data that I could get for this event because, you know, international organizations collect data from the countries and it takes really time. And the top trending country is India. India is one of the workforce exported to other countries, and mostly Indians working in United States, Saudi Arabia, and United Emirates. And particularly in these countries, there's big trend of remittances turnover. And if you look at other countries, Mexico and China also trending in this chart. And that's why, while with international experts, we are reviewed these countries' best practices, and we have seen that India have done a lot of advancement, technological advancement, to develop their remittances inflows and outflows. And they integrate their platforms with some leading countries where they receive mostly remittances. I can give one example with Singapore, and also a lot of integration are going on with UAE at the moment. And I would like to highlight here Azerbaijani indicators in terms of the remittance infrastructure. When we did with experts analysis of remittance infrastructure in Azerbaijan, we did 3 A's indicators to analyze the trends. One was accessibility, one was affordability, and another indicator was how this is available. In terms of availability, still Azerbaijan is doing a lot of things. We have 7 international money transfer systems and 5 local money transfer systems, which is quite well operated and provide services to their clients in various currencies. One is manat, euro, dollar, and ruble. And also when we did analysis that deeper the whole infrastructure, we considered POS terminals, ATMs, and payment terminals in order to seize the readiness of infrastructure. Just in case, I would like to highlight that when technological advancement move forward, and as a regulator and also market players, stakeholders review existing opportunities to advance the solutions. We also reviewed in terms of accessibility cards. I would like to highlight here debit cards, particularly social sport cards and salary cards and other debit cards. I would like to mention that when we did analysis related with salary cards, we have discovered that foreigners, particularly working in Azerbaijan as a non-residents, they were either from Turkey or either from Russia. And starting from January 2017, it is obligatory. Employers have to give their employees salary in the cashless form in using salary cards. And also social cards is one of the biggest portion, particularly pensioners and other government aids are provided via these cards. And all this together, it's 50%, even more than 50% of the market share of debit cards. And I would like to here highlight key migrant challenges. Maybe you know Azerbaijan belongs to the countries that in compliance with FATF recommendations, and regularly international authorities are providing various or updating various recommendations, and they are follow up how the countries execute this recommendation in compliance with these rules and guidelines. I highlighted some key points. Sometimes migrants have challenges because they do not have relevant documents. They have to they have to submit various documents in order to open a bank account to get some services. Or vice versa, it can be complex documentation requirements. Sometimes notarized documents can be not enough. It can be requested to provide apostillized documents or other relatives documents, other approvals, which create a lot of obstacles for migrants to receive or to get the access to financial services. And limited financial literacy is also one of the key trending topics. Even for upcoming years, we are planning so many educational activities with various stakeholders, including IOM and also state agency in this area. And I would like to highlight, I don't want to repeat the remittance costs. Thank you, Elvin Efendi highlighted it in a very broad way and giving a lot of examples. We have also similar issues. Sometimes remittance costs also create another challenge for migrants because they have to pay a lot of money for extra money in order to send their earned salaries or earned incomes to their families. And particularly banks, sometimes we receive sometimes some complaints that until beneficiary receive the final amount, till that time banks use some investment tools, this transferred money, in order to get some float rate and to earn some money. It also causes additional challenges for the migrants. And another key points I would like to highlight: accessing to payment infrastructure, because if a migrant hasn't opened any bank account or hasn't owned any card or hasn't other identification, they will not going to have access to the payment infrastructure. And also discrimination and bias, because sometimes we also make such a joke among our colleagues or some experts. Azerbaijan has very geostrategic location, and we have very neighbors that have so many difficulties in global financial markets, and we have to follow these rules and international regulations, and sometimes it is difficult also to handle both at the same time, because when you see there are so many relatives living here or living in neighbor countries like in Iran or Russia or Georgia or Turkey, sometimes we have to understand these human basic rights and their basic needs. This is the end of my presentation. However, I can pick up some questions from the moderator if he would like to highlight some specific points to elaborate more or to add more by my side.
Thank you, Ms. Mamadova. Yes, you talked about the financial literacy because today we are talking that there are a lot of on the supply side, digital instruments, banking system is trying to facilitate new things, but there should be a demand side which has proper absorption capacity of this kind of instrument. So you touched upon the financial literacy issues. Can you explain a little bit what banks in Azerbaijan can do more to enhance financial literacy of migrants and their families?
Thank you. It's really very good point to discuss, particularly big banks. And the major reason is that they have so big branch network and they can be accessible through various regions. We can access to those people via these regions or other posts also, because they have very big branch and service points, and through them also it is possible to reach various rural areas, villages, to educate those people. That's why we are planning to organize some educational activities for upcoming years together with these all stakeholders. Maybe you know we have also financial literacy team, a specific division who actively educate all types of segments of population including people from rural areas, including migrants. But migrants very recently has become a key priority for us, and thanks to the projects that you raised and cooperate with us, and also some other relevant government agencies also raised this issue. I think particularly I would like to highlight here our website platform, which is called Bizim Pullar. I ask all of you to subscribe social media channels of this platform, and also central bank platform, because central bank social media channels, to receive on time very interesting competitions, very interesting projects that we do in the financial literacy area. Thank you.
Thank you very much, Ms. Mamadova. Please. Having the time constraint, let me proceed to our final speaker, Mr. Matthew De Heering, Head of Russia, Central Asia and Caucasus at the Business Development and Communications Department of SWIFT. Please, and Mr. De Heering will speak about SWIFT's regional perspective on cross-border low-value payments. Please.
Esteemed colleagues, thank you very much. Thank you to the Association of Banks for having me here. Thank you to the IOM for facilitating that as well. I have a few slides as well. A little bit on how SWIFT sees things from a strategic perspective, some statistics on the way payments in and out of Azerbaijan works, and then a little bit about what SWIFT is doing to try and help out. Because I think if we start with the strategy, our tagline, if you like, is instant frictionless secure transactions. As a banking cooperative, that is very much our vision. We believe that we can achieve that together with our member organizations as a cooperative. We can make payments to anyone, anywhere in the world, 24/7, 365. We're working with domestic instant payment platforms and making sure those various domestic and regional platforms, in what's fair to say is a geopolitically interesting time, interoperate as well as possible through ISO standards, through single security, identity, and so on. So that's the big picture. Coming to the points that were raised by all of the panelists, our angle on this is, of course, that we agree, and we participate very closely in the work of the G20 and the FSB, which has set itself some targets and which we, as a banking cooperative, participate to. So if I take them one by one, cost, obviously this is something where the banks, as our participants, have their own decision to make. We want to make sure that those aspects are as transparent as possible. I mean, just to be clear, as far as the single message over the SWIFT network, its cost is relatively negligible. It's measured in euro cents, right? Some banks know this, some of their customers don't, when SWIFT fees are mentioned. But I think that certainly in terms of some of the solutions we provide to avoid exceptions and investigations and rejections, which are a big chunk of the cost, even though they're a small proportion of the payments themselves, there's a lot that we're doing there and on the compliance side as well. As far as speed, and some of the statistics I'll be showing later are about speed, the target that the G20 has set itself is that by 2027, 75% of the payments are credited, and to Ms. Mamadova's point, credited to the beneficiary within an hour, and the remaining 25% within a business day. Now that's 2027 target, and as we'll show, we're getting there. Globally, that proportion of funds that make it to the beneficiary account, not just the bank of the beneficiary, stands at 50% today, right? In terms of access, and including some of those online tools, I think it's fair to say that SWIFT, together with the industry, is moving to API-based technology so that the information isn't only available to the back office and IT systems of the banks, but to the customers who are by now used to having an online 24/7, 365 access to everything on their phone and don't understand why they should wait for 2 days for their payment, which they're not actually, as my statistics will show. And in terms of transparency, the tools that SWIFT has by now made ubiquitous in terms of being able to track an entire transaction, not just your payment, your message, but the entire transaction, means that that transparency is available today to all banks in the world using SWIFT. So where do we stand as far as Azerbaijan? Those two rectangles, the first one is 75%, and the next one is 100%, right? Those two G20 targets I was talking about. In green there, in light green, we have payments going out of Azerbaijan. The target by 2027, so it's okay, is 75%, and we stand at 37% today. And the target for the 100% of the payments to be credited within a day, remember, is 100% by 2027. And for payments going out of Azerbaijan, we stand at, I think it's 88% today. So not bad, considering we still have a little over 4 years to go. However, on the incoming payment side, and I'll have a breakdown on the next slide, on the incoming payment side, the picture isn't quite as rosy, or another way of saying it is that there's more work to do, right? And only 11% of inbound payments into Azerbaijan are credited within an hour, and only 72% are credited within the day. Again, still 4 years to go, and those figures there for Azerbaijan banks based in Azerbaijan are significantly better than some of the other countries that Ms. Mamadova was mentioning in her elegant pentagram chart there in the neighborhood. But still, other countries also neighboring are significantly faster. So if we break that down then, this is the outbound payments first, so the top line, right? We see that there's a vast differentiation. Payments going into the US take 2 hours to make it to the account of the beneficiary, on average. And this is low-value payments, which at SWIFT, and I think also at the G20 level, are $10,000 equivalent or below. That's 2 hours. That's not bad, right? Through the entire chain and to the account of the beneficiary. Whereas payments going into Korea, China, the UAE, same time zone, take significantly longer. And some of that is because of compliance issues, and some of that is because operational issues, wrong account number, designation or purpose of the payment isn't correctly identified. And as I'll show on the last slide, there are some things which SWIFT is, as a cooperative, providing as a service to banks to help out with that. So that's how we get to that top green line, broken down by the country of the beneficiary, whether it goes through the US, if it's a dollar payment to Korea, let's say, or whether it goes directly into the country. Now, if you look at the next slide, and these are payments coming into Azerbaijan, that's why we have the black line on my stats there with the rectangles lower, right? It takes 15 hours for payments coming from Ireland, up to 1.3 days from neighboring Russia. And my team and I have been talking to banks in Azerbaijan and in the region, and I would say there's two types of reasons for this. One of them is the same all over the world. It's payments coming from abroad, compliance, beneficiary, operations, formats, you know, do I have a copy of the contract which allows the payment to go through currency control, etc. But a second thing, we believe, speaking to banks, is because banks wait. When they get a payment instruction, they only actually credit the account to the bank of the beneficiary when the statement comes. The statement comes from the dollar account, let's say, overnight, and only upon receiving the statement does the bank post the money to the account of the beneficiary. Even though the number of cases when a payment is actually canceled, which is the risk that is being hedged by waiting for the statement, is vanishingly small. And we believe, and we'll talk to the central bank about this as well, but we understand that to be not a regulatory requirement, but a market practice based on things that happened 10, 20, 25 years ago. And if we look at, let's say, neighboring Turkey, where the US dollars are also on the correspondent account in the US and not physically in Turkey, as we know, right? Those numbers there are much smaller. So we believe it's a market practice thing, and working with the Association of Banks, with the SWIFT user group, we'll see how we can work through to make that user experience better. Because in the end, the alternative is that all of the stands here, those payments don't go through the banking system, but through fintech alternatives, which are perhaps less under the control of local supervision. Let me put it that way. So that's the statistics as far as the country is concerned. So then the question is, what is SWIFT doing? Well, in terms of the speed of the payment, and also specifically for remittances, we believe that it's a question of making sure that the SLA is faster. That's called SWIFT Go. Basically means the same level of transparency, but there's a 4-hour maximum time to process. And in reality, statistically, we see that those payments go through the entire chain in 5 minutes, on average, right? Of course, that average is buoyed by the fact that dollar transactions between the UK and the US are a big chunk of the volume, right? But a second part of this particular sort of service level agreement on SWIFT is that there's no deducts that are taken from the amount. So if the payer pays 1,000, the receiver is credited with 1,000. Now, obviously, between themselves, bank charge money, right? And the initial debtor bank may charge a fee, does charge a fee, which is then shared along the chain. But in terms of user experience, the payer knows that up front, and he or she knows that the beneficiary will receive that same $1,000, right? So that service is available to all banks using SWIFT, and a large number of beneficiary banks in Azerbaijan have already implemented this. That's a service available on SWIFT for everyone, just by virtue of being a SWIFT member. It's a service level of agreement. Secondly, in terms of making sure that those exceptions don't happen, which constitute a large chunk of the cost, right, there's a possibility over SWIFT to pre-validate the account number, the beneficiary, the purpose of the payment, with the beneficiary bank at the end of the chain. So instead of going through your whole correspondent network through the $2 clearers and into Canada or what have you, right? You immediately ask that bank in Canada, with which your bank doesn't have correspondent relations, through API to validate the IBAN and the name of the account. And thereby, you avoid that 1, 2, 3% of cases where that beneficiary account number doesn't match, maybe because it was a false invoice, maybe because it was a mistake, maybe because the transliteration doesn't make it through. You avoid that mistake, you avoid the rejection cost, you avoid the non-STP, and you pre-validate the payment. It takes seconds because it's an API-based service, which can be exposed to corporate clients, typically, the way it's implemented, and then implemented at the level of the back office for retail clients to avoid the compliance risk of having people trying out fake accounts. So that's what SWIFT is doing. That's our perspective on regional payments. And we're very happy that Azerbaijan is, I would say, personal view, very much implementing API-based and client-friendly technologies very fast. Some of the fastest implementations across the world of these solutions, which again are available to everyone on SWIFT, have happened in this country. They're used as use cases within SWIFT. So that doesn't go without the support of the central bank, it doesn't go without the support of the banking association, and doesn't come without very API-savvy technologists at the banks working here. So that's our view.
Thank you. Thank you, Matthew. A very, very interesting presentation indeed. I have a very quick, small question, like 2 minutes.
Okay.
If you can answer, like, among these criteria, you said cost, speed, safety, transparency.
Mm-hmm.
From the user side, which criteria the users are most concerned about?
It depends on the type of user and on the amount.
Low value payments.
Retail or corporate SME?
You said low value payments, just overall.
Overall, I think I would say it this way. The assumption is certainty, so you want to be sure. So that is almost a given, right? Then I would say cost certainty, and once you have cost certainty, then speed. So I don't want to make a three-dimensional graph with my hands here, but once you have certainty of crediting and certainty of reasonable cost, then it's speed. And transparency, it's all four. Because you want to know where the payment is. So often, the payment's on the way, it's in the chain. But your bank knows where it is. This has been doable over SWIFT for 5 years. You know where your payment is in the chain, right? That functionality is available. So, yeah, I wouldn't make them mutually exclusive, if I had to give one speed, yeah, if I had to give one speed within reasonable cost, it's my final answer.
Thank you so much.
Mr. Hurshid, your question looks like you are asking mother, which among your children are dear to you? It is a very tough question because all of these elements are important for the customer. Speed, transparency, all of them. Yeah.
Elvin Bey, please.
Yeah, maybe quickly chip in. We are talking, if we are specifically talking about the migrants in low and middle income countries, the amount we are considering is like 200, 300 USD per month. And this amount, this transfer is a kind of like monthly salary you receive. So the families or the recipients, they are pretty much used to this kind of timing on the transfer. So they say like every month, this day of the months, I'll receive the money. So for this small amounts, usually in the migrants, especially in the low-income countries, the cost is the more deal breaker than this like overall. If we widen the scope, it's like making 200 to 1,000, as like Matthew alluded, then definitely speed comes into the play as well. Thank you.
And if I may end with one point, and I think this discussion shows why doing research and looking into the needs of migrants and doing analysis also of your customers is quite important, and taking these needs and priorities into consideration. Thank you.
Thank you so much for excellent answers. We have 7 minutes and we want to address the audience if anyone has questions about this interesting topic. No questions? Okay. I want to address panel members. Would you like to add your last round of points, like a key message or an appeal? Please, you can have 1 minute.
I would like to add some experiences that I had, because I also worked very closely with various segments of the, how to say, customers, because I had some commercial bank experience as well. I will give you one example. One company registered in Turkey. They had LTD, limited name of the structure establishing company, but in Turkish language it is called anonymous, anonim şirket. When the charter has been translated into English, it has been translated as it is. And when we send original document, notarized documents to the correspondent banks that requested this for AML KYC procedures, we received many questions related with this type of the structure of this because of the only one word. And one word cost the customer a lot of money in terms of notarizing, posting, and date, time, speed, for everything. And when Matthew mentioned SwiftGo, it is a major requirement is that within 4 hours to execute the amount to the beneficiary. It is a little bit challengeable for us because of the AML KYC procedures in our side and also sender side. And all this verification have to be done in order to execute payments or remittance transactions, whatever transaction is, appropriately. Otherwise, it will be very difficult. That's why this time requirement is sometimes difficult from the international recommendations, implementation side, not only the bank side. Banks, of course, are interested to provide high-level satisfactory services to the clients, but because of the regulation and recommendations, it takes longer to proceed all this. And particularly for migrants, there are a lot of documentations, and particularly enhanced due diligence are used for migrants. So, thank you.
Thank you so much. Elvin Bey, please.
Yeah, maybe throughout this discussion, we basically maybe gave a little bit less importance or emphasized less the role of the government. I would bring back this again, especially from capital and saving facilitation point of view. What the government also needs to somehow think about is indeed a healthy competition between home of migrants and the recipient countries. So the interest of the home countries is that, all this money the people make, expatriates, migrants, stay in their country. So they do their best for that. But at the same time, recipient countries should do the another way around to make sure that this money comes to their country. And one of the ways that, or the means to basically speed up or to facilitate this process is for the governments to work closely with the financial institutions and the overall capital markets to make available the online or digital investment solutions. There are, for example, some countries are quite advanced, like they call it diaspora bonds. Similar to this, like the people who are basically sit in another country and they have some savings, they shouldn't be considering investing this money in their home country, but rather send back easily to buy a land, to buy a house, or to buy bonds, etc., easily and faster. So that's also another dimension we should be also working and also encouraging the governments to think about. Thank you.
Thank you so much. Please, Matt.
So answering what Ms. Mamadova said 100%, we agree very much that we're talking here about the cash leg of the transaction, but in some cases there's a real economy leg, whether it's identification of the person, whether for a trade transaction it's the bill of lading. A lot of this is paper-based, and it goes hand in hand. I agree with you 100%, and some of that is no longer of the purview of the banks or of the central banks, but other ministries in the country. But as a financial cooperative, as a worldwide banking community, it's probably our job to make sure that we do our part and talk to that other side of the real economy to make sure that happens. But I would support what you say, and in terms of fraud prevention and so on, there's a lot that can be done centrally. So we're working with banks on that as well.
Thank you, Maria. Would you like to final?
Okay, a final note. Maybe I wanted to add also on the government part, but maybe to sum it all a bit up, I think, and I repeat myself, a point of cooperation is important, and also mainstreaming migration, and therefore also remittances into the different strategies. When we talk about financial inclusion strategy, we should think about migrants and remittances recipients. If we think about development or economic development, social development, we should think about migrants and recipients of remittances, and mainstreaming these kind of points into all our respondents and all our development strategies. I think this is essential to address the various issues we've discussed today. Thank you.
Thank you so much, all the panel speakers. I think it was a very insightful, substantive discussion. I think we have all agreed that remittances are very important because they are benefiting 1 billion people in the world, their livelihoods, and the reduction of the cost of remittances will directly impact on the lives of these people. And I think the banking and financial sector can do a lot to help migrants to reduce the cost, to increase their financial inclusion and their overall well-being. I think with this, we are ready to close our panel session. Once again, thank you, and I invite you to give a round of applause to our panel speakers. Thank you.